Okay, this is Brant from tradeguild.blogspot.com, and it's actually almost 3 o'clock in the morning, so if I sound a little funny or I'm kind of slurring a little bit, that's why. Back with PWEI, and this is PW Eagle Rubber and Plastics. And I mentioned the stock. I've been watching it anyway, and Briefing.com came out with a list of basically low float, low cap stocks with high short interest in them, and this was one of them. It doesn't necessarily mean short squeeze, but it certainly raises the opportunity and the chances of that. So, what do we have here? We have a very nice ascending triangle, and 2 months ago these weren't working whatsoever, like I said earlier, but now they are. And there's the volume. See that nice decline in volume as we build tension like a spring. And we get to this apex and we look for a breakout. So, if the short interest sees this breakout, and maybe it will trigger a short squeeze. So, what else do we have here? Okay. I think according to the measurements of this triangle, my initial target for this stock is going to be about $40. So it's a pretty nice move. You see MACD right here is in gear, and I think PWEI looks really good. Actually, I think I may enter a position on Tuesday here. Let's take a look at something else here as I fade. Oh, almost did the same one. I'm fading. VCLK. This is value click. And again, we have a nice little consolidation pattern. Let me see if I can draw it in here for you more or less. It's pennant-like, I would say. And if you ever see these formations and you're not quite sure, they look a little funny, it's not real symmetrical, take a look at the volume. And if it's not really obvious to you on a daily chart, what you should do is scroll out and take a look at a 3-day, and it becomes more obvious. So there you go. There's that descending volume. And I wouldn't call this a flag, but it's kind of an interesting formation, this big up day on a 3-day chart and subsequent little consolidation here. According to what I'm seeing here, I have an initial target on this stock of about $20. And by the way, look at that volume. We say volume precedes price. You see big money taking their positions, and they can't hide that. They can hide a lot of things, but they can't hide taking a big position. You'll see it in volume. And as technical analysts, we are copycats. We're basically trying to copy what smart money is doing. So they leave their footprints, and there's one right there, and we try to follow. Let's take a look at some accumulation distribution. Sorry, quick sip of water there. Now, in this stock, MoneyStream and TSV are both divergent, and we're going to show you MoneyStream is in red here, and that's a leading divergence. Look how it's way up there around $22. And if we look at price up here, when price was around $22 in this level, and we look where MoneyStream was, it was right here. Now price is down here around $17, and MoneyStreams are about 22. That's a leading divergence, and what that tells us is, as we were reaching the top here, there was a certain level of accumulation going on. Right now we're at a lower level, and there's a lot of buying interest here. There's a lot of positions being taken, and we can see also that in BOP here, balance of power, green signifies buying. That is healthy, strong buying. And if we go back and we take a look at June and July of 05, the buying back then wasn't even as strong as it is now. MoneyStream wasn't as strong as it is now. TSV was about the same. Actually looks a little stronger right now. So basically, we got this big move from $10 to $20, and we look better right now. So imagine what we could do here. Uh, that's not really, there's not necessarily a correlation uh, in a very symmetrical sense there, but it's food for thought, I think. I would throw this stock if I owned it on my stop channel here, and basically I would have a stop at this level at about 1680. So basically, you could give it a little bit more room if you want to see if this pennant played out, maybe as far as 1614. Myself, I like to mitigate risk, so I would be up here around 1685. Let's take a look at another stock. This is going to be our last one for tonight because I am fading quickly. It is FMC, what I do for my bloggers. So anyway, short position here. There's that nice uptrend that was in effect, and then we see this 50-day moving average in yellow starting to roll over. At this point, you don't want to be long in a stock that 50-day moving average is pointing down. Um, this is our period of accumulation, and then this is our period of markup as far as the market cycle goes. This is our period of distribution, and we are now in a period of decline. So if we take a close look, we can see what happened with volume there. Big spike, big breakdown, made a huge gap. Stock basically went back up and filled that gap. I don't know what caused that, what the news was. I didn't look. I'm not really that interested in it. But, if the market maker got caught with his pants down here and didn't expect this gap, he may have held inventory at higher levels. In this case, it's a specialist because it's New York Stock Exchange. So they close the gap. They liquidate that inventory that they held at higher levels. But this 50-day moving average is acting as resistance, and we could see it at this point here, and we're moving up again and hitting resistance there. So here's the play. We had a nice update yesterday, and we have something that looks kind of similar to a Harami reversal pattern. In any case, it's a doji. It represents indecision on a day that the market was up pretty strongly across the board. We don't see a lot of gains here, and we have that 50-day moving average there as resistance. So, any one of those things on its own is probably not all that convincing. But when it's taken in context of all the other things, it says that this is a pretty good short position right here. The idea is if we get a move outside or above that 50-day moving average, we're going to stop out. So you can short at something like $61.15, or today's high was $61.50, and you could have a stop at $62. So you have a position that has only 50 cents of risk per share. That allows you to take a large position. If you have, you want to risk 2% of your portfolio, you have a $10,000 portfolio, that means you have $200 risk. You could buy 400 shares as far as risk goes of FMC. Of course, 400 shares would cost you about $24,000, and you've only got 10. But what I'm saying is you can take a big position and really have very little risk, but you need to wait, you need to be patient and get a good entry. Let's take a look at some other things here. Here's the ADX indicator, and basically it has been declining, as you can see by this yellow line, since March. So it's telling us, what we already know, that we're in a period of decline and distribution, and that the uptrend is most decidedly over. Here's our accumulation distribution indicators. Basically, money stream is divergent, and I would say my target for this stock initially is going to be $56, and then we're going to see what it can do from there. But take a look at money stream there. It's in a leading divergence. Price is on the level here when money stream was up here around 62. It's now down around 56. There's trouble brewing in FMC. That's it for tonight. Thanks for listening. Appreciate it.